Now, the last time our guest joined us, she said the European crisis was one of the biggest market risks that investors were actually ignoring. Now, let's hear what our Duchess of Doom has to say today. Sarah Quinlan is the founder of macro advisory firm QAM. Now, Sarah, you are feeling vindicated today when you look at the European markets. What are your thoughts?
Well, I think there's more to go. And I think the reality is when you don't deal with a problem, you know, your mother always said, eat your vegetables first. They didn't eat their vegetables. And so now you're sitting here and the reality is hitting that there's not enough money over there right now to do it. And then what happens yesterday? The ECB comes out and warns on inflation. The exact opposite thing you would want them to do.
What do you think we're going to see out of investors here?
I think investors are going to take their money and go home. As we've seen, the retail investor, who we usually think lags, actually has been ahead. They've pulled out $13 billion out of stock funds in the last 6 weeks. I think they weren't really there in the first place, but those that were there took their money and are going home. And I think the other thing that's really interesting is the only people who really are sitting in the equity market are those who really are required to be fully invested. Because I think that adage of where else are you going to put your money, cash looks good to me.
So getting back to Europe for a moment, the Spanish debt auction, the French debt auction, that's just the tip of the iceberg, a sign of things to come.
You know, the bond markets always rule. They always tip you off as to what happens. Stock investors tend to be a little later. You know, they get married to their positions. They believe the story. I say marry your partner and not your positions, all right? So the reality becomes very simple here. You've got to fund these debts. It's getting harder and harder. Do you really want to take a 75% haircut if you put new money in, which you could be doing in Spain, you could be doing in Portugal, you could be doing in the periphery? And this will, of course, go over to the major markets, you know, of Germany, France, et cetera, over time. And I think that's the issue. Again, you look at risk reward. Am I really getting paid enough? I would say no.
Let's talk about market technicals for a second. We're actually going into somewhat of a risky weekend. People aren't feeling good about Europe. Tomorrow the markets are closed. In Europe, they're closed on Monday. What is this going to mean?
I think it's craziness that they did not put off the unemployment number until Monday. I think that the futures will be trading. You know, people are coming in. You guys might be coming in to announce the number, but I don't see how we're going to trade it. People are squaring their books within an hour to watch the Masters. And, you know, after that, we've got a bigger issue. So I think what's going to happen is people are going to go to cash, and the market will actually have more of a teeter-totter because Europe will be closed.
So this could be the correction that people had been warning about for weeks. What does the bond investor do then with that kind of message? Because bond investors had been worried about this long ago.
Well, I think the thing is a bond investor should feel great because the money's going to flow into bonds. And I think that that's really the issue. The money's going to throw into bonds and into safe currencies. You know, we saw today that the euro Swissy hit 120. The Swiss National Bank said they're going to defend that. That's pretty hard to do. That's a lot of cash you got to throw in there. We have a saying when I was living in Switzerland, when the tough gets going, the tough go to Switzerland. And I think that this is exactly what you see happening. And that will, of course, benefit the dollar. But that hurts earnings. Think about the Fortune 100 companies and 30% of their earnings coming from Europe. That translation will hurt.
Are you feeling frustrated at all? Because the reality in Europe is fundamentally nothing has changed. The last time you were with us, you laid this out. Is the market just late to accept this? What's the deal?
Well, there's always been the state taking care of everybody over there. So somehow they miraculously think that the state is going to step in here and pull something out of their hat. This is not going to happen this time. So they're going to grind through it. You know, they have two options. But remember, you've got 27 different countries trying to focus on one goal, but they're not focused on one goal. They each have their individual goal. And the other thing complicating things, remember I mentioned April 22nd, French elections. So the election cycle is starting here. This will disrupt things. If François Hollande gets in, which is expected at this point given where the polls are, that's a 75% tax rate for the rich. The money's leaving.
Sounds like we're putting a crown, a jewel in the Duchess's crown.
You may be there's a reason why we call you the Duchess of Doom. Sarah Quinlan, founder of QAM.